Hello, my name is Renato Beninato.
Hi, I'm Jonathan Otis.
We are here today to talk a little bit about mergers and acquisitions. It's one of the most hot topics that has been around the language services industries in the last 3 to 5 years, if not longer. And I'd like to start with a story, Jonathan. About
Please.
1997, I had a translation company for 15 years in Brazil. And one day somebody calls me and offers me $750,000 for my company. I had 65 employees in Brazil and Argentina. I had a very good client base in 12 countries, worked mostly with final clients, and I had no frame of reference. And when somebody offered me, I was a $1.2 million company at the time. When somebody offered me $750,000 cash, I said, wow, that's a lot of money. I can buy a new car, I can buy a new house. Remember, this is 1997. It's in Brazil. The context is very different. So we signed some documents, and after 3 months of negotiations and so on, the day before we signed the final document, I got a call from another translation company, a new company, that had investors, private equity firms that were investing in the industry. They were outsiders. And just out of curiosity, I asked the investor, how much would you pay for my company? Mm-hmm. And he said, well, based on the information that you're giving us, I would say that I would start at $1.5 million. And I said, whoa, wait a second, right? And we eventually sold the company for $1.5 million. And I still think it was too little. And you know why?
Why?
The challenge was that I didn't have any help. There was no reference. In 1997, the industry was starting to globalize, and this is why they wanted to buy a company in Latin America. And there was no market research, there was no data, there was no real information about the industry. And I was working in the vacuum. I was trying to get information from other types of companies. And I was very happy. It ended up well. I'm here today. But I felt the need of guidance that wasn't there. Mm-hmm. So you've heard this before.
Absolutely. There's stories all over the place of people that have been approached. They start working on a deal. Then they realize how complex it is. They might bring in a friend, a broker, a banker, or whatever. And they all tell stories of getting 2 or 3 times more once a professional is in there working with them.
So we're in 2019. This year, Nimdzi has helped 2 companies, 2 LSPs, one in Canada and one in the United States, get acquired by other larger LSPs. And my goal here today is, since you are our mergers and acquisition expert, full-time working here with us at Nimdzi, to discuss a little bit of the topics that usually happen in this conversation. And let's make this a little bit of an FAQ, right? So,
Perfect.
The first question is, why do people sell their companies? Why do they want to sell their companies?
Well, they want to sell their companies because they might be going through a lifestyle change. They're thinking about retirement and other things. They are bored. They're burned out. You see a lot of that. Maybe something is changing in the industry. The technology is changing in the industry, and they don't feel that they're experts in the new technology. They don't feel comfortable with what the changes are, so they feel they need to move on. And there could be disagreements with partners. There could be lots of different reasons why.
Well, I've had disagreements with previous partners, and I walked out of a company that I had in the past. So that's a reality. I've also seen succession issues, right? So you're a business owner, you build your company for your children, and then your children decide to be doctors, engineers, they go somewhere else, and that plan goes down. So it's an opportunity to cash out sometimes, right?
There's also, I think, in larger organizations versus the smaller ones, there's resource issues. If you don't have a lot of resources or a lot of expertise, maybe your managers aren't truly salespeople, so there's always that resource issue
and
that
also
you might
capacity,
be looking for.
Right? Mm-hmm. You need to increase your capacity. You closed a very big contract. I know of a story of a company that won a big account, and they needed to ramp up in Europe very fast. And setting up a company, hiring people was something that was time consuming. It was faster to acquire another LSP and take that as a foundation for the growth. In fact, and we can talk about this a little bit later, these are factors that are going to affect the evaluation of the company.
Absolutely.
But so these are reasons why people want to sell. But in a business like this, in mergers and acquisitions, you need a buyer.
That's
so
correct.
why do people want to buy companies?
Well, people are buying companies because they want to grow normally. And they want to grow, that's more revenue, that's more customers. They might be looking for some technology, but they also are often looking for people. I mean, people are a commodity. Having experienced managers, have experienced program managers and project managers, people need that all the time.
I think that the word that they use now is talent.
Oh, you're right. Talent. People need talent all the time. They might want to go into a new vertical where, you might be an expert in documentation. And so they want to add technical documentation as a vertical. And they might want to expand geographically. Maybe they think they've got too much in one area. They want to move in different countries. They want to move across the country. So there's a lot of that going on.
Yes. And these activities, they happen, it's part of a market dynamic, right? So there is constantly, these types of mergers and acquisitions are happening all the time. But every once in a while, and it's a cycle, it's usually 7-8 years, there is another boom of mergers and acquisitions. And we seem to be in the tail end of one of those, where you see all the mid-sized companies being gobbled up by the bigger companies. Right. And that creates an opportunity for the smaller companies to rally up, because there is a vacuum that is created in the middle, so they can get together, buy the more entrepreneurial LSPs, will buy other LSPs and fill that middle gap, which is what has been happening over the years.
Right. Transaction size is a big deal. $2, $3, $4 million companies will get bought by $10, $15 million companies. $10 or $15 million companies will get bought by $50 million companies. $50 million companies will get bought by $300, $400, $500 million companies. And that doesn't change.
Yeah.
And those transaction costs are sometimes very similar, but that is how things will come up. Okay.
So let's talk. Well, so we understand why, and now the obvious question is how, right?
That's right.
And I realize, and I'm going to ask you the question that I'm always asked. Is the first question that I'm asked is, how much am I going to get for my business? How much am I worth?
That's always the first question.
Yeah.
And everyone has their own formula. There are formulas that we'll go through. There are a process that we go through. We want to see how much money you're making. If you're a small privately owned company, how much of your personal expenses are in the business? Is there bank debt? Is there other things? So, but the things that really determine what the price will be was, are you growing? If you're a company that's growing 5 or 10% per year, if you're a company that is maintaining 80% of your customers from year to year, in other words, you're not having to replace half of them each year before you can even grow a little bit. So if you've got good customer repeatability, and if you're profitable. So if you're growing, have repeatability, and you're profitable, you will get a nice multiple for your company.
Well, and the funny thing is that, well, it's not funny at all, but the fact is that people really frequently start thinking about selling when the revenue starts going down. You know that we have here our info drops, and one of the info drops that I did very early on, and these are short videos that we have in our YouTube channel, I said that I called this info drop morning prayers. I've been telling this, I've been telling this to all my clients over the years, is that every morning when you wake up, you have to think about 3 things. What am I going to do today to grow my business? What am I going to do today to buy another business? What am I going to do today to sell my business? So even if you're not thinking about selling your business now and today, you should be preparing your business for that moment. If you get an unexpected offer, or if you have a reason why it would make sense to sell the business.
And even if your revenue was falling, as you pointed out, doesn't mean somebody won't buy you. It will affect the price. It will affect the multiple.
Absolutely. Yeah.
But there are people that look for companies that are in that situation versus ones that are growing really fast.
Yes.
And every buyer is very different, and every buyer is subjective to their own items. I think in this market today, it's a minimum 6-month process, probably 6 to 12-month process to sell your business. It might happen faster than that, but I think once people look at you, look at your numbers, get comfortable with the idea, go through due diligence,
so what is due diligence? You said, what do you mean by due diligence?
Look at your numbers and your operation and your contracts and your people. Look at everything very carefully.
So the buyer puts together a team of lawyers, accountants, consultants on their side, and they're going to review all the information that you share.
Yes.
Right?
Yes.
So another tip is, if there is anything, don't try to hide anything. Be upfront.
It will come out
about your weaknesses, because it will come out.
It will come out,
and that's very frustrating. If you're very upfront with the challenges that you have in your business. And by the way, I like to say that even companies that are losing money might be interesting for some buyers. Some buyers will want, and this, it depends on, there are many variables. Don't count on what I'm saying, but there are situations where companies will buy businesses that are losing money for tax purposes, because they can reduce, depending on the time of the year, on the type of transaction, they can reduce their taxes, and they're essentially buying a company that is losing money for capacity for a much lower cost. So even if you're losing money, that's not the end of the world. There might be people that are interested in some of the assets that you have, like your client base, your expertise in certain technology. Maybe you're the only one company doing localization in COBOL, and there are all of the COBOL engineers are dead, so you have a niche there, even if you're not making money.
We absolutely have buyers that look at that.
Yes. So the third question is, how much is it going to cost? So I am selling my company, or I'm buying a company, and you are literally, Jonathan, our broker. So how much do you cost? How much do we cost? How much does this transaction business, how much money am I going to spend to sell my company or to buy another company?
I would say the easiest way of looking at it is it's similar to selling your house. And even the percentages in the end run are very similar to selling your house. It's a financial transaction. There's a lot of things that have to happen. The industry and brokers are used to getting a certain amount of money.
So it's a commission.
It's a commission, yes.
Okay.
There will be a commission based on the money that you receive and the total value of the sale. And there's a formula. It can be a very straight line formula. It could be a variable formula, depending on what you're looking at and how you want to incentivize us.
Yes.
We agree that on that formula ahead of time. We sign an engagement letter, which both has this formula locked in stone, and it has a time frame that we expect to be able to work on this deal.
But okay, it's very nice. This sounds like sales speak, right?
Yeah.
We are salespeople, so it is sales speak. But if I want, how much is it going to? Am I talking about 20%? Am I talking about 2%?
No, it is similar to selling a house. It's going to be around 4 or 5%, of the deal. It could be higher than that if it's a very small deal. It could be lower than that if certain constraints are made and certain levels are made. That's just variable to each individual deal.
So this is one of those very annoying kind of conversations that we have, because the answer for everything is it depends.
But I think the most important thing, and I think I strive for this, is I want the seller to be comfortable with what that number is.
Yeah.
So as part of getting an engagement together, we work carefully on that. We look at different scenarios. We should take a look at the company financials and just understand, is this going to be a $10 million deal, a $5 million deal, or a $25 million deal? And that's going to help us back into a fee structure that the customer's happy with. And I want the customer to be happy.
Absolutely. So walk me through a process. Okay, so our viewer today says, okay, I want to think about selling my company. I'm 57 years old. I'm tired. My company is running by itself. Where do I start? How does it work?
So you'd come to us. We would sign an NDA just between the two of us, which protects your financial information and protects this conversation. And we would negotiate an engagement agreement, which includes the term and includes the fee structure and what our goals are. From there, we would collect financial information on the company and prepare documentation that's sent out to buyers. We do this in a blind fashion using what's called a teaser initially. So we send out a teaser that says, hey, there's this company that does this, it has this revenue, this many people, it's in this geographic area, and this expertise, vertical expertise or customer segments or whatever. We send that out to a group of individuals, or I should say a group of companies that we know are interested in buying, and we see what the interest level is, and we get those parties to come back. The parties that are interested come back and sign an NDA between you and them, which then allows them to start seeing your information and learn more about you. And it's at this point that they'll even learn who the company is.
Yes, so that's the key point, right? There is an element of confidentiality.
Absolutely.
This teaser and this first level of conversation is confidential, and your employees don't need to know. Your competitors, you definitely don't want your competitors to know about it. And the circulation is very limited. So I know that we will send 100 teasers and get like 3 or 4 parties interested, or maybe 10.
Yeah, I think a little more than that.
Yeah, maybe 10 parties interested, and then we sign NDAs with 3 or 4, right? And so there is a process that the broker filters this information so that not everybody is getting this information in the market, and you are protected in one way.
And we know the buyers that are doing lots of transactions, so we know what they're looking for. So it's a very good process. It's very upfront, and we always report what we're doing, and you can get an update at any time on who we're talking to and what the responses are coming back. And you're getting requests from me all the time for more data or answering special questions. And once we get that first data passed and they know who you are, we actually try to bring the parties together as soon as possible.
So when you talk about data, what type of data and for how long?
So we need data back for 2 to 3 years to show the growth pattern that's coming up, to show the change in customers, to show the change in the organization and how it's been maturing. And a lot of information about the last 12 months. We have this thing we call the trailing 12 months. So we actually make up a financial statement from wherever we are right at this moment, back 12 months, making that look like a full year, and see what your sales are, what your profitability is, what your growth has been over that period.
So let's say we're in May and you close your books in December. So you want a trailing 12 would be May from the previous year to April of this.
Correct.
Okay.
And that's the best indication of what your actual performance is at this moment.
Okay.
And as much as they want to see what you did last fiscal year and a couple fiscal years before that, the last 12 months is really indicative of what's going on, and they're most interested in that.
So, and they also want to know what is the level of client concentration that you have?
Yeah, I would say if there's one item that can really determine what your value is going to be to somebody, it's in what we call concentration. And this is, if you look at your customers, how much of your revenue is one specific customer or your top 10 customers. A lot of times you might have your first customer might be 20 or 30% of your revenue. That to you might sound really good. I've got this really strong customer. But to the buyers, that's a risky item, because if that one customer was lost, they'd lose 30% of the revenue.
Yeah, well, 30% is still good. It's worrisome.
I'm not saying
there's no good or bad.
That's correct.
If you are more than 50% of your revenue comes from 2 or 3 clients, that might be one of those things that will affect your valuation.
That's correct.
Right? Or, and again, this is why it's so challenging. Maybe a buyer wants to buy you exactly because of that client.
That's correct.
You know, we had that situation where concentration was a challenge for the seller, but the buyer was so much bigger than the seller.
And all of a sudden that
concentration becomes much smaller. It would actually help the bigger entity have a less concentration.
That's
so
correct.
every case is a different case.
You mentioned the things to think about 3, 4, 10 years out. This is one of the items that you
Yeah.
should keep your eye on.
Yeah.
Because concentration will have an effect on.
What
on
other things
pricing.
have an effect in the valuation, in it's like contracts?
That's correct. Having contracts is good. And
It's not the norm in the language industry to have long-term contracts or exclusive contracts, even more rare. But we can, if you have any of those, or you have a contract with the government or with an entity, that is something that gives predictability to income in the future, right?
Correct. And I think contracts were a bigger item in years past than they have been going forward.
Yeah.
Just because companies have changed their procurement methodologies and their expectations and things like that. We all know it's harder to get people to be exclusively with you.
Yeah.
And people look at gross profit. I think that's the next one. Gross profit is what drives bottom line profit, but they're looking at your gross profit, how much you're costing you to have translators, costing you to use third-party tools and other things. And so gross profit is a big indicator of what your operation is like. And that varies actually with the type of LSP that you might be or the type of technology company that you might be. We're not just talking to LSPs, we're talking to every kind of company that's in the language services space. So we have a lot of technology companies, we have companies that write software, sell software, have subscription revenue. And so all that is going to be super important, how that revenue is coming in and what your gross profit is.
Absolutely.
Yeah.
So this is a very active space in the industry right now, and in my experience, the biggest value is having almost like a coach, somebody that helps you navigate the process and help you go through that. So one of the things that I would encourage our viewers today is essentially to reach out to us, to reach out to you, Jonathan, or to myself. We have a document that will be available to download that essentially describes every step of this process.
Yes.
But this is one of the 4 lines of business that we have here in Nimdzi, and I'm happy to report that it's a thriving part of our business, and we want to hear from you. We want to hear your questions and see how we can help you buy or sell companies in this space to help you in your growth journey.
That's correct. Look forward to talking to as many of you as we can. Any questions that you have, please come on and ask us.
Our emails and contact information will be available maybe on the screen here. Thank you. Have a great day.
Thank you.